All right, welcome everybody. It's Dr. Keith. How is everyone doing today? Hopefully you're doing well. Okay, so we'll get started. Hey, Chris. I'm only going to take half hour of your time today, but I wanted to meet and give you again what I'm seeing in the markets, some big picture, and then in 2 weeks, we'll spend a little bit more time talking some specific strategies. I've noticed a lot of people are taking vacations right now, enjoying themselves, which is fantastic. So we'll probably have a lighter audience today, which is absolutely fine. But I still wanted to meet, kind of go over what I'm seeing, and if there's time, we'll answer questions. But I do have to get out of here at 1:30 Eastern sharp. Okay, and it's funny. I mean, summer is funny, you know. From a trader standpoint, a lot of people try to stay out of the markets. Right, there's the old, now the markets are lower in volume and you can't make any money, but you can. And I certainly do less in the summer just because of lifestyle choices than I do in the fall and especially the winter. I trade the most, you know, in the winter and early spring. But there's a lot of great opportunities right now, and the markets are kind of doing what we thought they should, right? Which I'll explain. So with that, let's get started. So if you look at the S&P here, okay, the ES, or the, you know, those of you that trade just stocks, let me put up the SPY. So again, we hit new highs today, right? And it's been doing that for a few days in a row now. We had on the 8th, on July 8th, right, we had the candle down. And it is funny because, and I've known this for years, but you know, fear does scare people and it drops quicker than it goes up. But when this candle happened, the amount of emails I got saying, hey, Dr. Keith, do you think now this is the time we're getting at bigger move down? And we don't know when that's exactly going to happen, right? We know from a seasonal perspective, if I just kind of blow out my seasonal and look at the green dotted line, we're getting close for a little bit of a dip and then higher. But these little dips, when you're in a strong uptrend, I kind of ignore, okay? But just from a pure profit taking standpoint, I do believe at some point here, you know, we're going to get a bigger retracement. So how do I know that? Well, we don't know exactly when that's going to happen. But what we do know is retailers are still shorting the heck out of the markets, folks, like 70% plus last time I looked, which means they keep picking tops, okay? They can't help themselves. They think that this was the top, this was the top, this was the top, this, and today. And we don't know when that's going to be until they start going long, then we know that we're at a short-term top, okay? I know it sounds silly. I know it sounds maybe even a little crazy, but most retailer traders lose money. And so when I track what they're doing, when they're shorting and we have a seasonal long play, I'm looking for long plays, okay? And again, it doesn't mean it goes up every day, right? I say that week in and week out because that's not how markets work. So to go long right now, just because I said that almost at a recent high, could put you in a lot of pain. But what it's telling you is the markets are doing what they should. And because they're doing what they should, okay, we love seasonal moves when it's normal. And so as you're getting your triggers, as you're looking at some of your favorites, you know, look at Apple, okay? Now, here's another perfect example of a couple things. One, we knew seasonally we like Apple long now, right? And so we had two triggers. We had one right here on May 19th, okay? Went sideways for a while, up and then sideways for a while, right? Then we got the re-entry if you got out of that when the Laguerre turned back up with Green Hackenacci. But here's the beauty, okay? You knew probably with high probabilities Apple's heading higher now because it usually does this time of year. But now you have a system, at least I do, that tells me when I should exit the entire trade. Okay. So see all these green bars, these green Hackenacci, these green dots. Here's a couple of yellows, no red yet. That's how you maximize profits. We don't know if that's going to be tomorrow, the next day, next week, next month. We don't know when Apple's going to be at a high. And we're not going to catch the exact price of the high, but we're going to, on average, get about 80% of this move. So let's just call it this move with this Laguerre right here, okay? So from here to wherever it maximizes, we're going to grab about 80% of this move on average using Laguerre with Hackenacci, okay? And so where that can be extremely effective in these moves is you can stay into the trade longer and grow those accounts. Whereas if you didn't have a system like that, what would you do? You might say, well, I'm going to get out right here at 134. You know, it looks like a top. Or, hey, this candle's really small. I'm going to get out right here. I made good money. And you did make good money. But why don't you make more, right? And that's, again, where it can be very, very beneficial on these running, I call them runners, right? You don't know going into the trade it's going to do this. But once you're in it, you take partial profits. Again, let's say you're doing an option play. Let's say you did 2 contracts on Apple here, okay? I'll tell you exactly how I do it. Once I'm up 50%, I eliminate my risk, okay? I take one off the table, and then I have a mental stop that if it closes at break even or worse on that second contract, I'm out, okay? And in this case, it kept going, right? So, you know, one way of managing this is to just keep moving the stop 2 or 3 bars behind it. That way, if you get that wick, or just give it enough room because you have faith in the Hackenacci and you know that at some point it's going to turn red and that's going to be your exit point. And no, you're not going to get out at the high, but you're going to get out 80% to 90% from the trigger to the high. And let me tell you, if you can do that every time, okay, you're not going to be very sad. You know, another example of that, right, a while ago was that Home Depot trade, right? So again, let me just back up so you can see it. Back here, okay, we had a seasonal long play, and then we got the Hackenacci trigger here on March 8th. Okay, so then you got your 50%. You're like, well, okay, oh, it can't go any higher. It can't go any higher, but it just kept going higher, right? And then you got the red dot on April 23rd. Okay, so if you got out here, you got in here, you see you made a big part of that move, and you don't have to overthink anything, right? You don't have to overthink anything. And it'll keep you in those trends. Then it actually, you know, went a little bit higher, diverged, and then it made its move down. But now it's back on track, right? So if you got back in here, you made some money. You're not going to maybe get this runner you had back here, right? We don't get runners every single time, folks. But now you're getting the red dot. You can exit. You still made money, you know, 80% of that move there, okay? That's how you can manage trades. Because the hardest part isn't getting into a trade. The hardest part is saying, I'm happy with the amount I've made. Why be happy here? Okay. Why say, okay, at 292.53, I'm getting out because I made money, I'm happy. Why? I mean, there's nothing telling us at this point we're at a top yet. Okay. So maximize your profits is what I'm getting at. Okay, so NASDAQ, same thing, right? We keep hitting new highs. And again, we keep getting divergence. The divergence is being overridden by the bullish in the market. Okay, so again, that's very bullish. The Dow, be very interesting to see when it hits this 35,000, like it did back here. What's going to happen, right? Is it going to then make a pullback, or is it going to finally break through that 35,000 level? Okay. Remember, these moves down, granted, this is pretty significant, right? So coming in from, let's just call it 34,500 to the wick here at 30, let's call it 33,000. Okay, that's a pretty big move. But folks, this is not a market crash. Okay. this is what markets do. And that's what I'm waiting for on like the ES and, on the spiders and then is to do this again. And what it's going to do is it's going to give us another great buying opportunity. Okay. Like we did back here, back here, back here. Okay. These Bollinger Bands, they're getting stretched. Then we get the Ligera and Hackenacci lined up. These are phenomenal entry plays. Okay. Yeah, you can make money on the downside. And if you do, just realize it's more riskier because trends are in place for a reason. Okay. So there's nothing wrong with taking like this short play on June 10th, having your stop right above the wick here or above 35,000, whatever your risk tolerance is. Okay. But in a lot of cases, you can get what happens here. You get a trigger, it goes down for one day, and then you get a move back up because, again, you're fighting the institutions right now. Okay. But big picture, the bulls are still out. Okay. Let's talk a little bit about the VIX. So I got really excited last week when we got a combo trigger long on the VIX. Okay. And not for me to go long on the VIX, but what I'm waiting for is I want to see another bigger spike though up to here, here, so I can short that. Okay. But it didn't go up high enough for me to short the VIX. Okay. And the reason why I want to do that is when the VIX rises, typically the markets are going down, right? There's fear involved in the markets. So it'll go up higher pretty quick, like it did up here in May, early May, then wham, right back down. Okay. You can study a chart on the VIX and you will see that it always comes back. So when you get those spikes, there's a lot of different ways and strategies that you can scale in and make a lot of money on the short play of VIX. Okay. So I'm waiting for that next opportunity, the next spike up over 27 to 28. I'll start shorting. I'll keep shorting if it keeps going higher. Okay. But in saying that, what I'm doing is I have a plan ahead of time. I'm not going in a full position at 26. And then if it doesn't, and then if it keeps going higher, add in more and add in more. And before I know it, half my account is margined. Okay. I have a plan ahead of time to say, okay, I'm going to add in a total of 5 times. So when it gets to 26, I'm going to put one in there. If it goes to 28, I'm going to put another one in there. If it goes to 30, I got another one. And then if it goes down, okay, I had 3, let's call it 3 contracts that was in there for, and then it turned around and made me money. But if it keeps going, I'll do it up to, let's say 5 times if that's what I'm willing to do with my account, so that I'm only risking a certain percentage on each trade. Okay. And that's really what I look for. So keep an eye on that VIX, folks. Keep an eye on that VIX. All right, so bonds. Okay. And again, I'm bringing up the future symbols. Okay. But I can do the same thing with like TLT. Okay. Okay. So we know that bonds typically go higher July, August. Okay. And if you go back and watch any of my videos in YouTube, some of my seasonal webinars, I always bring up bonds because it's one of my favorite trades. Okay. Now, I didn't take a long play in bonds this year just because it wasn't acting, bonds was acting a little abnormal for my taste. Okay. But we typically top in mid-August. We got our trigger on May 20th, which was a little bit early. Okay. But if you're doing a TLT option play there, you enjoyed that trade. But there's all kinds of reasons if you listen to the news and read about why bonds are higher. Okay. But for crying out loud, every July, August, June, July, August, okay, bonds go higher. So take it for what it's worth. What I'm looking for, if I'm going to enter in this now, okay, I'm looking for like another 2 to 3 week trade. I'm looking for another Ligera back into the green and out. I like to see this price come back below the middle Bollinger Band here, the 20 period. So let's say it came down to 143 and we got another trigger long, okay, in the next week. That would be a good opportunity in my opinion. Okay. All right, let's talk about the dollar index. So the dollar index, typically right around now, let me blow this up, the seasonal for you just a tad. So you can see it's sideways to down a little bit, right, until middle of August. Okay. The real, what I really like looking is when we get into September and then October, okay, dollar index will go higher. So typically, I do think we're going to get another pullback on the dollar index, which I'm not necessarily going to take that. Although if you do kind of scrunch it in here, right, we do have a potential like almost a double top coming or whatever you want to call that. But, you know, we're getting a sell trigger on the Laguerre kind of, but Hakanachi's green. So, you know, I'm not looking to take this short right now, but I do think we're going to head lower and then before we go higher. So I want to see this go lower. So it gives me a good entry point here, especially when we get into early fall. So that's kind of my plan right now on the dollar index. Now you could talk me into saying, well, if this has another down day, you can put your stop above these wicks, right, and have a short play. Your risk is pretty low with all this reward. I agree 100% with that. Okay. I agree 100%. All right. So my favorite hog trader has a question or wants me to show hogs. So I was looking at this today, actually. Let me clean up this. Let me remove these drawings. So here's one of the predicaments we're in right now on lean hogs. Okay. We had a Laguerre trigger long here. Okay. And I actually thought about taking this publicly. And you're going to say, well, wait a minute. Why would you do that when you have this seasonal move coming? Okay. For another couple of weeks or another month, I guess I should say. And I agree. And that's why I didn't. But you could talk me in again. If you're okay with putting your risk below this wick here, right, you can just take it up to, you know, 110 here, take profits, and then when it rolls back over, go short. So, you know, you might think, well, wow, Dr. Keith's really getting outside the box here, but I'm just trying to show you with trading, as long as you're okay with your risk reward, I'm definitely have a bias to the downside here, right? For obvious reasons. Okay, the seasonal indicator is telling me over the last 10 years, we head down right now. Okay. We had a nice downward move, consolidate. Now we're going to probably roll over here at any point. Okay. So my method is I'm waiting for that pullback. I want to sell trigger, then I'm going to short lean hogs. Okay. But if you're thinking, well, we had a long trigger here. Okay. I'm going to try to get a little bit of money out of this, counter trending it. Okay. You can do that. My only caution is make sure you're okay with the risk because this thing's going to come down hard here, probably in the near future. I'm just waiting for the trigger to take me short on that. Okay. Okay, so let me just kind of give you, and again, I apologize. At 1:30, I do have to go. But I wanted to give you that analysis, and I wanted to kind of show you some things that, you know, I think is something you can really watch for during these summer months. So, you know, when you look at some of these opportunities, you know, let's look at some of the major stocks. Okay, let's look at Amazon. So we had a trigger here on July 2nd on Amazon. Okay. You know, seasonals to the upside, and it's Amazon for crying out loud, right? So what happens, folks, I get this question a lot, especially people that are kind of new to watching me or seeing what, you know, my system. Okay. The question is, well, how do you find that Laguerre, green Hakanachi, right? That's what the screeners are for. So every day I can sort by anything I want by Laguerre that tells me when the Laguerre is triggering. Then as long as it matches up with, in my opinion, the Hakanachi, right, then that's a great opportunity. One of the things I like to do though, because I can be picky, okay, I like to have price generally touching the middle band or lower for a long play. Okay, so if I got in, for example, right here at close to a high, it doesn't mean Amazon's not going to go higher now. There's a lot more risk though, right? Even a pullback to the 20 period, okay, you're in pain. So I'm not a big breakout trader, but one of the main reasons I wait and look for things that have better entries is because I always think about what if they just pull back to the mean, right? Most stocks are going to pull back to the mean, right? So keep an eye on that, right? When these stocks are just driving forward, you know, you can even put orders out here on some of these right at that 20 period and see if you can get, you know, if you can get filled on some of these. But some of these stocks are just, you know, Tesla's another. I'm just waiting to re-enter at this point, right? Just waiting to re-enter. And had the down move. We had, you know, these move back up. You know, Tesla's going to be at 900 by the end of the year and probably much higher. Okay, in my opinion. So is earnings going to be the next kickoff when it gaps up and keeps going, or what? We don't really know at this point. Okay, but what I do know is once earnings over, I'm looking at, you know, add some more Tesla stock in my portfolio. Okay, NVDA. Right, it's been absolutely phenomenal trade on NVIDIA. And again, we hit new highs and Laguerre triggered red dot. So if you were in this Laguerre here on the 20th, okay, no red dots down here until the 9th. Okay, and again, the reason I'm showing you this is, let me blow it up. As you're in this trade trying to management, let's say you took half your profits right here, just as a general number. Every day you just go look at your charts. Oh, no, green, green. Here's a red, okay, which means a yellow dot. So then you make a decision. Am I going to wait for the next red Hackenacci, which didn't happen, right? So you can stay in the trade. And then right here, you have the 2 red Hackenaccis, which gives you the red dot and the Laguerre triggering. So that's your exit point right here. Again, 80% of that entire move, instead of just taking profits here because you're happy you made money, right? That's really what I'm trying to educate folks for, is taking profits. There's nothing wrong with taking profits, but why take profits, all your profits, when there's still room for a stock to make you more money? Okay, that's what you have to really get in tune with mentally, is get rid of your losers, let the winners run when they do. Not every trade's going to be like this, right? Not every trade's going to be like this. You don't know going into it how long it's going to stay for you. But when it stays, take advantage of it, okay? All right. Okay, let me bring up crude oil here before we kind of conclude today. And again, I do apologize for today, going to be fairly short, but so, you know, crude is very interesting. And here, let me clear my drawings. Seasonally, you can see behind the scenes as we're bullish, it does kind of want to go lower here in the summer months, okay? Now, in saying that, we've got this nice uptrend, and every single darn time it retraces it all, especially close to the bottom band, we get a retracement higher. So again, as an idea, now we got another move down here. As long as retailers continue to short, okay, on the next long trigger, you can keep going long on these, okay? And how would you do that? Well, I would look at a 4-hour chart. So on a 4-hour chart, when we get that next Laguerre trigger long with green Hackenacci, that could be an entry point, right? So we have one right here, Thursday at 9, okay? And so if you opened up at, let's just say 72.74, you know, you made some good money there, okay? And again, you can use USO, any of the oil ETFs, or, you know, oil stocks. Can be very, very important there to understand that. But so now what I'm looking for here is that next long trigger, okay? And, you know, maybe it'll come down to the 71 level again, almost a double bottom, and give me that long play. You know, that would be very nice. And you're almost playing the range, but I'm playing the range to the long side, okay? Yeah, I mean, there's a lot of them. There's OIL, there's, okay, just kind of show you OIL, USO. You can even look at oil stocks, let's look at like, I forgot, what is Marathon? MAI. I trade Marathon in January, but I'm looking for MRO. That's right. Yeah. You know, they're following pretty much the same patterns there, right? And so you can really maximize some of these opportunities when they come in. So, I do think oil is going to go higher, but what I'm kind of looking for now, because I'm flat in oil right now, is okay, maybe now come on down faster, come on back down on this bottom band, then give me a long trigger. Okay. And again, let's say you did it back here. Okay. You can just have your stop below the swing. And if it breaks the swing, who cares? Get out. But if not, you can let it go for a ride. Okay. Well, all right, folks. Well, again, if you have any questions, I know this is short today, feel free to send me an email. I'll definitely get to it. But other than that, we'll meet in a couple of weeks. I'm going to go over some more strategies, some of my strategies on what I am using to find trades, how I manage them. But I wanted to give you a big picture today, let you know that I'm still bullish. When we do get a pullback, I'm going to be patient and look to buy some more stocks, as we get into the end of summer and the fall. And there's a lot of great trading opportunities coming up. So with that, folks, have a great week. And I'll talk to you all soon. So yeah, you can do it at Dr. Keith at seasonal, make sure I spell it right, seasonaltraderpro.com. All right, folks, have a great rest of the week, and I'll talk to you soon. Bye now.